Boy, oh boy, you guys. Pretty crazy day today. So, the entire day we're basically rallying on pretty much everything. And after hours is really when we saw the action. So, Microsoft after hours is down a little over $16 right now. And you really want to pay attention to Microsoft. And here's why. Let me just show you on the cues. So, if we're looking at the cues here real quick, I'm going to go on the analysis, top 10. Microsoft is about a 10.15% weighting on the Qs. So going back to Microsoft, you know, um, as soon as the bell closed, we got the numbers, and pretty much nothing happened. It just fell a few dollars. So, the numbers were actually widely expected because in the prior quarter, they give us guidance for this quarter. So, it wasn't really a surprise to anybody. The numbers were actually well within line. Now, what investors were waiting for was the next quarter earnings, which are the Q2 2023 earnings guidance. So that came out about an hour 30 minutes after the market closed. So about 1 hour after the market closes, Microsoft, they do their earnings conference call. And as soon as that earnings conference call happens, they talk about current trends, they talk about the actual quarter numbers, and then finally they get into that guidance. And then after that guidance is done, they take a bunch of questions. So I want to show you guys exactly how we can find all of this information. So right on Google, I'm going to type in Microsoft Investor Relations. I'm going to click on this page. We're going to go to this Earnings and Financials tab. And we are going to click on Press Release and Webcast. Now, here is that Outlook that I was talking about. And then if we want to actually watch the conference call, all we have to do is we have to click on this webcast right here. So when I click into this, I could go ahead and play this video, but I'd rather not because I have that Outlook presentation right here. So before I go into that, let's just cover the actual numbers that happen. So I happen to have a spreadsheet of the guidance that they gave us last quarter for this quarter. So we can compare their guidance versus the actual fiscal year 2023 Q1. So let's just look at the numbers right here. They say revenue was 50.1 billion, increased 11%. Let's go ahead and check that. So right here, I have the year-over-year changes for Microsoft. So if we're looking at this right here, we see total revenue, we see the lower expectation to be 8.68% and 10.89% as the higher expectation. So what did we actually get? We got 11%. So that is slightly above the higher expectation that they guided for. Now let's take a look at operating income. We were expecting 4% to about 7.47% growth. Let's see what we got. We got 6%, so it's within line. And diluted earnings per share, $2.35. Now let's see what I forecasted here. So when I forecasted this, I was making the assumption that we had 7.47 billion diluted shares outstanding. So I was expecting a low of 228 and a high of 236. We came in at 235. So this was within expectations. So, long story short, nothing new. So let's go into the new data. So here's the new data, the Outlook. Now they give this to us in a nice little PowerPoint presentation. I'm going to click through a few of these, and this is what we want. So they give us these line items, line by line by line. Now all I have to do is I get all of these numbers and then I plug them into Microsoft Excel. So when I do that, right here I have the Q2 forecast. So right here we're comparing it all against Q2 2022. So I have these numbers all written down. I have all of these line items that I built out, and I'm literally just plugging numbers in. So when I plug these numbers in, I get a low expectation for their productivity and business processes revenue segment of 4.4 to 6.9%. For their intelligent cloud, I get 16.12 to 17.76% growth. Now, here's the big thing right here. So when I look at their more personal computing segment, we are expected to see a decline year over year. So this is a decline of about 17.14% to 16%. Now, if we're looking at the total revenue, I mean, total revenue is only expected to grow about 1.26% to 2.8%. So, that's not exactly all that good. I mean, that's actually pretty bad. But, you do have to remember that, the macroeconomics are not too great right now. So it's a blessing that it's at least positive. Now, if we're looking at the cost of revenue, this is going up as well. Let's look at the operating income. Operating income going to decline a little bit. Going to decline by about 7% to about 5%. So 5 to 7% decline. If we're looking at the diluted earnings per share, this is based off an assumption of 7.464 billion shares outstanding. Now that's diluted, by the way. So I'm looking at a diluted earnings per share low estimate of 2.24 to a high estimate of 2.27. So now with all of this information, I could go ahead and plug this number right here. I want to use the lower estimate to be a little bit more conservative. And I could plug that into the Q2 earnings per share. And I could get the 4 most recent quarters of earnings using this forward earnings. And then calculate my trailing 12 months earnings per share. So, when I'm getting 4 of the most recent quarters of earnings, I'm putting that together. I get $9.12 per share. The share price, I'm not looking at after hours right now. The share price at close today was 250.66. So this is giving us a PE ratio of about 27.48. Now keep this in mind, we have a PE of 27.48 with a revenue growth that is single digit, in the low single digits right here. Now they did kind of tell us in the earnings call that they were expecting the full year to see double-digit revenue growth. So I don't really know what that means. Is that 10%? Is that 11%? But, just judging off this quarter and the last, I don't think it's going to be all that much. So it may be very, very low double digits. So I hope you guys enjoyed this video and have a great one.